Q3FY22 earnings conference call of Subex Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note this conference is recorded. I would now like to hand over the conference to Mr. GVK Krishnakant. Thank you, and over to you, sir.
Thank you very much. Good afternoon to everyone who have joined the earnings call for the period ended December 31, 2021. Now I would like to introduce the members of the management who are present on the call. Along with me, I have Mr. Vinod Kumar, Managing Director and CEO, Mr. Suresh Chintada, Chief Technology Officer, Mr. Sumit Agarwal, Chief Financial Officer, and Mr. Himanshu Singhal, Financial Control of the company. I would like to start the conference call by going through the safe harbor clause. Certain statements in this call concerning our future growth prospects are forward-looking statements, which involve a number of risks and uncertainties that would cause actual results to differ materially from those in such forward-looking statements. The risks and uncertainties relating to these statements include, but not limited to, fluctuations in earnings, our ability to successfully integrate acquisitions, competition in our area of business, client concentration, liability for damages in our contracts, withdrawal of tax incentives, political instability, unauthorized use of our intellectual property, and general economic conditions affecting our industry. With this, now I would like to hand out this call to Mr. Vinod Kumar for his speech. Thank you.
Good afternoon. Thank you all for taking time for this call. I hope all of you and your families are safe and doing well. As you would have seen from the results announced yesterday, the revenue for the quarter stood at rupees 87.7 crores, EBITDA at rupees 8.63 crores, and PAT at rupees 2.1 crores. The last quarter was a tough one for a variety of reasons for us. But the good part is that we did quite well around the new areas of Sectrio, our security portfolio, and ID Central, our SaaS-based identity solution. To take a step back, 3 years back, we embarked on a strategy to expand our offerings from fraud, revenue assurance, and interconnect billing products, specifically offered to telco, to a wider digital trust portfolio to a multi-vertical market. It was very important for a sustainable growth of the company that we planned this expansion strategy. In line with that, we added our security portfolio, now called Sectrio, and identity analytics portfolio, now called ID Central. Now, these areas were significantly affected due to the pandemic, and as most of the new sunrise projects were put on hold. But we used that period to communicate extensively to the market and educate them about the need for such digital trust solutions as you grow the digital economy. On our core, we conceptualized Hypersense platform that will serve as a base platform for all our products and also help us to offer it as an augmented analytics platform to our customers. Now, I also want to remind you all that ours is predominantly a product business, meaning we need to generate a specific interest on our product for us to get the business from our customers. It's unlike IT services company that can participate irrespective of the nature of IT projects a customer might have. Having said this, our effort around the new areas are starting to show dividends. In the case of Sectrio, we had to quickly add the capabilities to cater to an OT market as we were seeing delays in IoT deployment due to the supply chain and COVID-related challenges. This has worked very well, and last quarter we signed up key customers in India, Middle East, and Americas. In India, in the enterprise segment, we signed up a major manufacturer with multiple sites. We also won a contract from a major public sector undertaking. These are very critical wins for us, and once implemented, these will be key references for us to leverage and grow our security business in India. Similarly, we have had key wins in Oman, Qatar, and Mexico. These wins clearly prove our ability to compete and win in the operational technology area along with IoT technology. Now coming to ID Center, the identity analytics solution, we are only focused on two markets of India and Indonesia. We had onboarded 4 customers in Q2. In Q3, we onboarded 7 customers. The API calls, which is a parameter on which our revenues are dependent, also has doubled during the course of the quarter. We expect this trend to continue. It's clearly getting into the profile of a fast-growing SaaS business. Unfortunately, the overall numbers are still heavily dependent on our core business and does not convey the progress that we are making in these new areas. Hence, I thought that it was important to provide these details. Now, coming to the core, we took a very important strategic decision to move to a subscription-based model from a license-based model with Hypersense. We hoped that we can easily convert all the upgrade opportunities into subscription model engagement. However, it is clear that we underestimated the challenges of these conversions. Directionally, everybody, including our customers, agree that it's the right thing and want to move to this model. But getting the alignment of procurement, finance, and other stakeholders are taking significantly more time. This has resulted in delayed order intake on our core areas and has had an impact on our short-term revenues. It had some effect on our Q3 revenues and also have an impact on our contracted backlog. To be clear, we have not lost any deals that we are competing on. In fact, our Hypersense platform has made our position significantly stronger. However, we have a longer process on account of model change and hence taking additional time. So this is a temporary situation, and once we secure these delayed contracts, the contracted revenues will increase and we will be able to drive the expected revenues from our core areas. Let me also cover briefly the security incident that we had in December. There was a breach of our IT perimeter by a ransomware threat actor. We were able to recover almost all data and bring back all the services without any impact to our customer operations. As the breach affected our test and development environment, we had to take some precautionary steps to take a shutdown of our infra and sanitize thoroughly. This had some impact on the ongoing projects and its deliveries. Our awareness of the space and preparedness to face such an eventuality enabled us to quickly bring back our operation. So in summary, we were able to overcome this incident with very little impact. Now coming to the talent side, we have added some significant capability to our senior management team. Sumit Agarwal has joined us as our new CFO. His experience of handling both IT and new age businesses would be very beneficial for Subex. We have also onboarded Vivek Chandok as our technology solutions head, wherein he will lead the new use case development on Hypersense for our customers. We have also onboarded Warren Dominski as the head of our North American business. Warren is very familiar with our domain and has had very interesting stint in product companies wherein he was instrumental in growing the North American businesses. So now we have a full team in the senior leadership to drive the execution of our growth strategy. I will now request Suresh, our CTO, to provide you a quick update on the Hypersense portfolio evolution.
Thanks, Vinod. Hey, good afternoon, everyone. Hope everyone is doing well and staying safe. So what I wanted to give a brief overview of what's happening on the Hypersense in the last 9 months. Since our launch over the last 9 months, we have crossed several milestones with Hypersense. We continue to add more capabilities based on our roadmap and the feedback we are getting from our customers. Today, Hypersense is fully certified on the Google Cloud platform, and we intend to complete certifications on Microsoft Azure, and other platforms in the coming quarters. The API framework is being strengthened to align with the industry standard TM Forum, and we have that on our immediate roadmap. And in line with our digital trust vision, we have built explainable AI capabilities into the platform. This makes it easier for business users to understand what decisions are being taken by the ML models that are in the platform. We recently concluded an initial definition of a trust framework for AI systems by leading the effort at TM Forum along with other telco partners. The AI Trust Framework also won a coveted award at the TM Forum Digital Transformation World Summit last year. And speaking of accolades, Hypersense has seen positive recognition in a very short time that we have seen. Beyond the award that at TM Forum, Hypersense has also won the prestigious Pipeline Award for our innovation in AI. So Hypersense has also been covered significantly across the media, and we have also been getting a great response from the analyst community as well. And of course, for us, this is just the beginning of our journey with Hypersense. We have recently launched Hypersense AI Studio as a SaaS-based offering, and today this offering is available for free trial on our website. I'm glad to say that several telcos and non-telco enterprise users are showing interest in trying it out to solve multiple use cases. Hypersense forms a vital part of our technology roadmap, and we are currently working towards rolling out traditional fraud management and business assurance solutions on the platform. This migration to Hypersense should unlock tremendous value to our customer base. In fact, the first customer on the Hypersense is now live, and we plan to launch our full fraud management offerings with Hypersense during this quarter. So overall, we are confident that we now have a powerful and robust platform to help our customers, enhance their decision-making capabilities and solve problems faster. So, Vinod, I'll give it back to you.
Thank you. That was a very brief on our business and some of the developments that we have had during the course of last quarter. Now, probably we can move to the question and answer session.
Thank you, sir. Thank you, sir.
Yeah.
Ladies and gentlemen, we will now begin the question and answer session. Anyone who have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. So our first question from Mr. Deepak Ocha from Radhe Capital. Please go ahead, sir.
Hi, just to correct, Deepak Chokhani from Raid Capital. Hello, Vinod and the management team. Thank you for this opportunity. There's a lot of frustration among the retail investors, including me. Every quarter we dial in with a hope that, with lots of hope from you guys that next quarter will be good, it just doesn't happen. And now we've reached a stage where, forget the top line, even the bottom line is, and the EBITDA is taking a beating. While you have very nicely stabilized the company, brought it back, repaid the debt and all, but I guess the fire or the basic ingredients to take the company to the next level is just completely missing. How long will this go on? And is it, and this question I asked last time as well, that isn't this a time for us to partner with a bigger company or a group which can take this company to the next level, or just completely sell this company to a better kind of a corporate or a group which can take it to the next level? I mean, how long we as investors just see it's been 7-8 quarters, I don't know. I mean, there's just zero growth. Yeah, that's it from my side.
Okay. Deepak, thanks for that question. Look, I think it's fair to say that we had some challenges with our core business this quarter for because of the transition that we are doing. As I've mentioned in my brief, we sort of, I would say, that underestimated the challenges of conversion. That being said, as I've, painted the picture of the new areas, which we started the engagement about 3-4 quarters back, because of we had to put a stop to it in the bulk of the last year. Now that has started showing good results with some of these key wins in these markets which we are focused on. Now, from a change of mix of the composition, I think that as we start showing you the details of some of the new areas, I'm sure that you will get the confidence that some of these new areas are growing nicely into a growing business. Obviously, they are different. The model and it's a SaaS-based business, so therefore some of the characteristics and some of the way you look at those things are different. But I'm sure that you will see that it is going into a very nice SaaS-based growth business. We have set the expectation that starting by the end of this year, we will add into our presentation the details, some of the specific details or metrics on which we are measuring the progress of those initiatives. And we still feel that we were waiting for it to get to a particular stage for us to provide that view. I think that by end of this quarter, that is by the end of this financial year, we would be able to come back to you with that details, which will give you the sense that they are growing into a fast-growing business. Now, with respect to the time, as I mentioned, these are product-based business. Obviously, the dip in the core is something which we will correct it very swiftly. But I think the incremental growth will have to come from these new areas. So we are in the right path. It will take a while more. I'm not going to give any specific guidance on numbers, etc. But as we set the expectation, we will provide you some of the specifics on the metrics of the new business at the end of this quarter, which will give you a sense of how we are progressing in those areas, Deepak.
Well, that's pretty useful, sir. Honestly, I'm not a techie guy to understand the specific which you just spoke. But can't we do something different can't we partner with some global majors? Can't we tie up with someone other than what we are doing existing, just to scale it up? Something different has to be done, I guess.
Look, I think in the markets that we are operating, we do have the right kind of partnerships. And as I said, this is, the digital, the security, identity, etc. Just sort of in the markets of India and Middle East, it's just growing, and we have seen the tenders coming in. There was a complete stoppage, but we have seen the 2 wins that I told in India. Both came as a part of a RFI. So we have started seeing the RFPs coming back again for the new areas. This is something which we have been working for quite a while. So as we go along, you will see a lot more, contribution from the new areas to our overall revenue. And that is how we will take the company to the next goal. So to answer your question again, we do have the right kind of partnerships in these geographies for us to scale the business. And also we have signed up with some global partners over some areas. So for example, we are now in most of our threat intel is a very important piece for us. Now we have signed up with almost all the major platforms to carry our threat intel, like Sentinel of Microsoft, and there are other platforms that have started carrying our threat intel for their customers to subscribe to. So both with the specific geographies that we are currently focused on and the global marketplace, we are dealing with it. But as I said, as we go along, you will see the contribution of these new areas making some impact to the overall revenue. And by the end of this quarter, we will provide you some metrics which will give you the sense as to what we are talking. We are definitely doubling the number of customers that we are acquiring for these new areas on a quarter-on-quarter basis. These are SaaS-based business, so their overall revenue at this point in time is not very sizable. But if we are able to get that quarter-on-quarter growth as we go along, it will get into a very nice subscription-based growth business.
That's great, sir. All the best. Just one last. Is this the worst? I mean, is this quarter the worst? I know you can't give the guidance, but we as investors, if you can't give the guidance, we need to know, is this the worst? Will things improve from here on?
Look, I think let's put it this way. The investments that we are doing around the new areas will continue to happen. Now, we had a bit of a challenge with respect to conversion of these, our core contracts, and we hope that with the, as Suresh mentioned, the new float management is being released by the end of this quarter. That will also fast track some of these upgrades that we are talking about. So I guess that from our the contracted backlog should start going up as we end this quarter based on the order booking that we are expecting this quarter. So from a spend perspective, from our cost perspective, we don't expect the cost to go up, at least in the next few quarters. But as we start seeing our new business going up, then we will start putting more muscle, particularly around the marketing, etc. And also, once we have got to a particular stage in these markets, we will start expanding to other markets. At this point in time, I said that we are very specific to India, Middle East, and America, but there's a lot of market out there which we want to cater to, which we will slowly do that. So to answer your question, I think that once we get this conversion sorted out, which is I'm talking about converting this our existing subscription license-based deals engagements to subscription-based engagements, things will start stabilizing for our core areas. We are at it, and definitely we will see some progress during the course of this quarter towards those conversions. The new areas, things are looking reasonably well, but it will take its own time for us to grow into a SaaS business because it's purely a subscription-based, pure SaaS businesses that we are talking about. So as with any SaaS business, it will take time. But the good part is that every time that we secure a customer, the monthly revenue keeps on adding, and that's a whole way to look at it, saying that we are building a much more sustainable, growing business from a lumpy license-based business that we are currently here.
Understand, sir. Thank you so much. All the best. But I guess if this is, I hope this is the worst, and hopefully things improve. But I guess somewhere then, if not, we should start exploring probably a potential strategic sale of the company to a potential new buyer. Thank you so much.
Thank you, Deepak.
Thank you, sir. Participants are requested to restrict to 2 questions per person in the initial round and may join back the queue for more questions. Thank you. The next question from Mr. Kumar Singh from JM Investment. Please go ahead, sir.
Yeah. See, I have first question. The other expense.
Mr. Singh? I'm sorry, sir. His number got disconnected. We'll get in touch with him. We'll move on with the next question. It comes from Mr. Pratap Maliwal from Mount Infra Finance Private Limited. Please go ahead, sir.
Hello, and thanks for taking my question. I just wanted to ask, in Q2 we had some delays that were reported over a potential software Hadoop's vendor who had gone maybe from licensing to open source. Are those delays behind us? And in Q3, the delays that we've had, are they related, or is there any other delays that we are getting regarding transition of customers? And secondly, my second question is that last quarter we had got some color on the order book that you had, and it was showing a positive growth. So can we please get some color on the order book this time, and when those we can expect those revenues to start flowing in? If you can please answer those 2 questions.
Okay, thank you. On the issues with respect to the open source things, I'm very pleased to let you know that those things have been sorted out. In fact, we have convinced the customers to move into our Hypersense platform in lieu of some of the other platforms they were considering. So to clarify that part, that is behind us, and we have just started the deployment of some of these things. There is some more work to do with the contracting, etc., because we'll have to redo the contracts, etc. But at least in principle, we have got agreement from all the customers to move in this direction, and some of them have already started that. The second question, if I understand that, is that the contracted booking is come down. When will it come back? If that is the question, you will see a progress on that coming back to the level it was, near about that level. We hope to catch up our contracted backlog to the level it was during the course of this quarter. If that was the question, then that is the answer. But if there is anything else, please come back.
No, I was just asking. Yeah, I was just asking color that some more details on the order book. That like last time we had given, I believe it was 38% up. Why? So if you can just give us a comparative figure like that.
Oh, all right. Okay. So this, I don't have that comparison. Let me come back to you specifically on that. But I can clarify that this time, because if you see that our contracted backlog, it has shown a dip of about $6 million. So that is the tune to which the contracted backlog has come down from the level it was. So we did have a challenge because all the customers have they do not want to upgrade anymore to our old platform. So therefore, all of them want to move to a Hypersense platform. Hypersense platform, we are not keen to provide it on a license model. We were insisting that it has to be on a subscription model. Now, we don't want to take a short-term view and change the model because this is very, very important for us to get all our customers into a subscription-based model. So the dip is to the tune of about $6 million when you look at the overall contracted revenue, and that will be more or less bridged as we go through this quarter.
Okay, I'll get back in the queue. Thank you.
Thank you, sir. We have Mr. Kumar Singh back in the call. Mr. Kumar Singh from JM Investment. Please go ahead.
Yeah. See, I have a first question related to other expenses. Every quarter, other expenses is going up. What is the reason for that? And out of that other total expenses, what is the contribution in that for forex loss?
Hi Kumar, this is Himanshu. Thank you for the question. So yes, the other expenses normally stays linear. This quarter we have seen some growth on the other expense side. It has the majorly increase on account of the travel getting increased because this quarter we know travel has opened up. So our salespeople and others are on the field now. So that is one of the extra thing which you will see compared to previous quarter. Other than that, there are few repairs and maintenance and rental expenses on the server which has gone up. This is on account of the new platform which Vinod and Suresh told. So there's some level of investment going on those fronts, which we have seen this time. So those are the high level things. Other than that, we have not seen any major thing. In terms of forex, this quarter we didn't have major forex gain or the loss. Total it was less than it was very, very minimal. So compared to previous quarter, there was nothing. So that's about. So forex, there is nothing, no contribution from forex side.
No, I have basic question. See, your turnover is very meager. Why you are indulging in forex hedging?
Okay, so I'll answer that. If you see only the forex hedging part, I'll be glad to tell you that we have gained through doing hedging. So hedging is something which gives me a cover over the normal exposure which we have from the forex end. So on a yearly basis, I have gained, or the company has gained around 73 lakhs till YTD December. Out of that, and the total losses throughout the losses for the complete year is somewhere around. For the quarter losses is 24 lakhs, which is comprising of a gain of 25 lakhs for this quarter. So hedging is giving us a benefit.
See what happened last quarter, your CFO told that they have a 2 crore forex loss in other expenses in the investor call. Okay, so if 2 crore on a EBITDA of 10 crore is a 2 crore loss, that means there is no financial control at all.
No, look, I think as Himanshu clarified this time, that on the other expenses, the increase is primarily on account of the increase in travel and some of the server-related things on account of Hypersense that we are incurring. There is no impact of whatsoever in the forex loss. we do a very small hedging. I mean, we have very small amount of hedging we started doing recently, and that has so far we have been very cautious there, and it has been positive. Now, with respect to the forex losses that you're talking about last quarter, now that is account on the variation between the pound, US, and INR, because we do have our offices in in UK and there, and some of the money that is received from there are in those entities. And when we convert for reporting purposes, there is an impact of this forex that will come into the picture. So I think other than that, the hedging, we hedge only a very small portion, and so far hedging has been positive whenever from the point that we started. The impact of particularly the as I mentioned, the total expense, the other expenses is on account of travel, and we expect that to slightly go up as we go in the current quarter as well, because our teams have started traveling again. And probably we will get into a kind of a steady stream mode in a couple of quarters when the travel will be on full swing.
Okay. See, my second question is related to ESOP. Is there any possibility to link ESOP to the growth of the company in terms of turnover as well as profit? Because what is happening, your employees are selling ESOP shares left and right, and there is no growth in the company. So there has to be some link between the growth of the company and ESOP selling.
Look, I think the ESOPs was we allocated the ESOP way back in 2019 and 2020. That is when the ESOPs were allocated. And today, whatever some sales that you are seeing is post vesting of them. There was a vesting of 2 years. So I think some of the employees are getting the ESOPs as we talk now, and though some of them are liquidated for their personal reasons. Now, on the new allotment, whatever we are talking about, it is what some people who have left their ESOPs have come back to the pool, and that has been reallocated to some key employees, particularly in the operating level. So at this point in time, we don't have any new ESOP pool or anything. It's the same pool that as you recall, we bought something from the market and allocated it that period of time. So we hope to come up with a new ESOP thing, and there some of these considerations are being. We will look into some of these aspects that you mentioned.
It should be win-win for both shareholders as well as employees. Otherwise, what is happening? Employees are making money, shareholders are not making money.
So that is where I'm clarifying. These ESOPs have been allocated in 2019 and 2020. Post that, we have not had any fresh scheme. The reallocation is only when somebody has left the company, that ESOP has come back to the company, that has been reallocated to some other new people. And all these new people, again, the vesting is again after, like for example, we allocated some portion that came into the pool. We allocated it in the board meeting yesterday. That will get vested over the next 3 years and things like that. So we have not had any new ESOP scheme, Kumar. It is the old one that we are seeing from 2019 and 2020.
Okay, thank you.
Thank you, sir. Our next question from Mr. Anirudh Dinturkar from HU Consultancy. Please go ahead, sir.
Yeah. Hello, sir. So, the first question is, have you lost any customers while, transition from license to subscription model?
No, absolutely not. We have not. In fact, we have already converted some of them, particularly some groups and some large customers who are already used to doing in fast-paced businesses. But you know that we have a very large customer presence in the EMEA region, Middle East, APAC, etc. And those are the cases where we are taking more time. So to answer your question, we have not lost any customers.
Okay. And if we compare to Subex to some of our competitors, so they run into the thousands of customers, while we have only limited 200 plus customers. So when is the basic reason for such wide difference?
Okay, look, I think if you look at our core products, in our core areas, the only customers that we have is our telcos. So our core products primarily cater to tier 1, tier 2 telcos. So if you look at India, we can only have 4 customers, right? I mean, Jio, Vodafone, and Airtel. So all the 3 of our customers. So our core products, we have close to about 200 customers. These are mainstream tier telcos in about 90 plus countries. Now for our new products, that is ID Central and etc. Now we are adding almost 4 to 10 customers. I mean, as I told you, we added 4 customers, Q2, 7 customers in last quarter, and there we will have a lot more customer addition. So as we in 1 year, if I look at the total number of customers, it will be significantly more than the 200 that we had on the core, because these are SaaS-based engagement where we will have the ticket size is also very, very small compared to our core business, but the number of customers will be quite large.
But considering the competition in Americas and EMEA region, so will it be possible? I mean, how possible it is to keep adding the or maintaining the run rate?
So with respect to our core business, our addressable size, I would put it maybe about 600 to 650 telcos. That's pretty much the universe there, and that is sort of we have some of the other telcos have our competition, and the way we grow in our core products is by grabbing more market share. And that's happening as we are with the Hypersense. That's one more thing that we are doing is that we are able to go and pitch a different model, which is very different to the model that we have to our competition accounts as well. So if you look at our core area, we are talking about a addressable customer base of 600 to 650. I'm talking about telcos. And there we now have the added ability to take in Hypersense augmented analytics platform. Now for our new areas, which is ID Central, etc., the number of customers will be thousands. Like for example, security, just about every enterprise will be a customer for us, and there we have taken a very specific focal, decision to address certain segments. So in India for security, we are looking at the very large enterprises, manufacturing, and the public, infrastructure, critical infrastructure. Those are the focus areas for us. The banks, the large banks, and things like that. So I think it is now, if you look at the core, that is addressable market, it's telcos, and every tier 1, tier 2, and large tier 3 are our typical customers. And for our new areas, it's a wider segment, much wider segment that we are catering to.
Okay, so can we expect like in next 3 to 4 years, more than 50% of the revenues coming from non-telco customers?
Next 5 years, yes.
Okay. And last question from my side is if we compare ourselves to competitors, so competitors have grown significantly due to the inorganic ways, So are we looking for any acquisition opportunity or something?
Look, our competition has not grown. They have grown as a company because they have bought into other areas. So, for example, if we are looking at fraud and RA, if you look at our fraud and RA business, they have not grown. But they have gone, suppose if they have gone and buy an activation or a billing, now that would give us a growth of that company. But if you look at the domain per se, fraud, RA, and interconnect domain, I do not think that they have grown just by acquisition. So as a company, if you look at company, their revenues, their other streams, there are other product lines they have launched, and therefore those are coming as their revenue. So that's where we are. So from a customer standpoint, that is not giving them any advantage. But it's true that they are able to carry a larger portfolio to a customer and able to compete in areas where we cannot compete at this point in time because we don't have that product range.
Okay. Thank you, Vinod. That's it from my side, and all the best.
Thank you.
Thank you, sir. The next question from Mr. Ravi Mehta from Deep Financials. Please go ahead, sir.
Yeah. Hi, Vinod. Just a very basic question. As we are seeing the challenges of moving to the SaaS model in the core business, just on the unit economics, how does it would work like, say, a 100 rupee deal split into 40 license, 40 maintenance, and or maybe 40 implementation and 20 maintenance? How would that deal convert if we are moving to the subscription model? Just to get some flavor on how the revenue trajectory can be on the core side going ahead as we transform to the SaaS model.
Okay, so if you look at a new customer, because new and old are very dealt with very differently. If you talk about a new customer, today if you look at, we get a license implementation, and then thereafter we get annuity on an ongoing basis. Now the change is that for a new customer there is no more license, and they give us a kind of an annual subscription. That will, if I have to equate it, that will primarily cover the support and the license part of it. Implementation, if at all any, based on the effort it is charged at actuals, So there is no change with respect to the implementation side. So for a new customer, I think the only difference is that in a typical license deal, the entire revenue of license, the perpetual revenue of license comes in a period of 9 months. Whereas in this case of the new model, if I equate that, it will come over a period of 3 years. But the advantage here is that at the end of 3 years, if the license gets renewed, I get an opportunity for to resell that part because it's coming on a continuous basis. Whereas in the case of a perpetual license, after 3 years, then they get the license perpetually. So in the short term, you will find that there is an impact. If you profile the customers, the same revenue comes over a longer duration. But in the long term, you will find that it helps us to sustain the revenue, and we don't have to. There is no lumpiness whenever we get a contract. So that is when it comes to a new customer. For an existing customer, if you look at today, what we get is primarily the annuity and the upgrade. When we come with annuity, that includes pretty much the license for upgrade, but we get the implementation revenue. Now, what the change is that in lieu of the annuity, the customer will have to pay a subscription. That will be annuity plus license. This is equally applicable for existing customers. So there is a difference pricing when we look at a new customer and an existing customer, because the existing customers have already paid up for the license. So we want to migrate them to this model. However, the big change is not from that angle. From a customer angle also, it moves from a CapEx line item to an OpEx line item. So that is something which a customer will have to manage from a budgeting standpoint. So from our revenue standpoint, I think for new customers, that definitely there is an impact with respect to getting revenues over a longer period of time. For an existing customers to an upgrade, the impact is much lesser because our subscription will more or less match with the annuity that they are paying on an ongoing basis.
Okay, so for existing customer, its annuity is equal to kind of your subscription as you would move them to the subscription model.
It will not be equal to. It will be annuity plus as a subscription fee, because we are providing some additional value on account of this thing, because there is no upgrade and things like that. So it will be annuity plus for our existing customers. And implementation in both cases are at actual. So based on the effort and the cost, the implementation will be at actual. Yeah.
Correct. So since your core business is it's just a follow-up, sorry. Yeah. So since the core the segment is a matured business, so you would be dealing more with the existing customers, or you're still adding new? Because in that case, probably the revenue should have not taken a hit as it's looking like so.
So I think it is not the revenue. It is not account of some of the upgrade things that we have. We get upgrade contracts, right? And upgrade contracts have got two components. It's not the subscription alone. I mean, if you look at our upgrade contract, I'm just giving a sense of it. Our upgrade contracts is typically have a PS revenue of about anywhere from $250,000 to $500,000 is the cost to upgrade, because we have to upgrade their systems, the implementation effort, etc. So it's not the license part which was there. The implementation part is where it is getting delayed because the upgrades are not coming through.
Okay. And any reason it's not coming through? Is it because of moving to the...
Exactly. It's a moving to the subscription model because it's a contracting and it's a complete procurement will have to be, it's a new contracting, so that is taking some additional time. It's not a, smooth upgrade, smooth kind of SOW kind of thing. It requires a legal, everybody to get involved to review the contract, etc. Now, the big advantage is that in this new model, if there is some addition, etc., if the metering will happen, right? So if their volume goes up, the metering, etc., will go up. So therefore, all these things will have to be brought into the contract. Otherwise, there is no point in just converting AMC into subscription. Then there is no point. So there are many other things that need to be captured when they move to a subscription, so that if there is any upsides, we get that, and that's where it is taking time.
Great, thanks. I'll come back. Yeah.
Thank you, sir. Our next question from Mr. Ratan Juneja from CoValue Technologies. Please go ahead, sir.
Hi, Vinod. Thanks for the opportunity. I want to understand the relationship with Microsoft Sentinel, where you're bringing in threat intelligence to them.
Okay.
And I understand the opportunity very clearly.
Okay, so look, I think just first let me tell you what is threat intel. When it comes to IoT, OT, because of the large honeypot network that we have, we are generating a lot of threat intel. Now, these threat intel forms part of our product. It's a core of our product which is preventing our customers from any threat. Now, we have had many requests from our customers to some of the customers, partners, etc., that they are very keen because they have existing their own internal infra, etc. So many of them will, subscribe to these threat intel with the intent of, strengthening their existing infrastructure. So we saw an opportunity primarily to engage and also showcase some of our capabilities, and therefore we have started offering this threat intel as a kind of a subscription. It's something like you could call it as a subscription for an antivirus or anything like that. Now, we have started offering it, so somebody can come onto our website and sign up, and they will get the threat intel there in a particular stick field, which they can integrate into their existing security infrastructure. Now, alternatively, some of our customers also go to platforms or marketplaces to buy such intelligence, buy such threat intel. So Sentinel is such a marketplace where many customers go to get different types of threat intel. So what we have done with Sentinel, Microsoft Sentinel, is that we have integrated our threat intel into their marketplace. So any of the customers who are using the marketplace for Sentinel going forward will be able to find our Sectrio threat intel feed and can subscribe from that marketplace. So what this has done for Subex is that it has significantly expanded our reach, because we would not have been able to get to all those customers. But because of this integration, a lot more customers are knowing about our threat intel feed, and they have started subscribing to it. There are other platforms similar to that of Sentinel platform, marketplace platforms, and we are also working with many of those platforms to integrate our threat intel fields in their marketplace.
Is there any success?
We have, so this is a very small subscription fee. We have started getting, it is a monthly subscription, I think around, starting with an individual subscription of around $500 kind of thing. So the idea is that it is primarily to increase the visibility more than anything else. So to that extent, it has given us a lot of, and there is a trial period of this thing. So we have just started. It's not a mainstream revenue at this point in time. It is more for us to promote and more as a marketing channel for us at this point in time. But once it gets to a particular scale, we will look at seeing whether we need to consider that as a big business. At this point in time, it it is for them to get a sense or taste of some of the intelligence that we have with us.
My second question is, you're presenting a very large opportunity in the presentation, $500 billion, etc. To address even some small portion of the opportunity, don't you think that we need to raise money?
There are two aspects to it. That covers the entire market across all verticals. Our current focus, this is for the Hypersense augmented analytics platform. Our current focus is primarily to telco. And I think that once in the telco, I think we have the reach for us to get to that place. And telco, there are many multi-vertical players, but there is no telco-focused player, and that's a gap that we are trying to bridge. So with respect to catering to the telcos, we do not think that we will need additional capital. But if we want to go a multi-vertical big when it comes to Hypersense, we definitely would need additional capital to go that goal. So at this point in time, we are focused on telcos with Hypersense.
Does it mean that we will lose?
Mr. Juneja, if you could please come back in the queue, sir.
Thank you.
Thank you, sir. The next question comes from Mr. Aditya Sharma from ICICI Prudential Mutual Fund. Please go ahead, sir.
Hello.
Yes, please.
I just wanted to understand, how are we using that 120 odd crores of cash balance that we have? Is it just sitting somewhere earning us nothing, or are we sort of thinking of using it in a much more efficient manner? Thank you.
Look, at this point in time, we have, there was an earlier question as to what is the capital requirement. So, some of these initiatives are very large and which requires, I'm talking about the new areas. Once we start getting to a particular scale, level, we both with respect to the product maturity and the product market fit, there will be a need for us to significantly scale. Towards that, we would need capital. So I think that we have marked a bit of the capital towards those growth initiatives. We have also started looking at some investments into early technologies which can help us in completion of our digital trust portfolio. That's another thing that we are focused on, finding technologies which are kind of futuristic, which can help solve the digital trust issue. So that's another area and where some of the capital will go. And the rest of the capital at this point in time, we are parking some FTs and things like that. But primarily, we are looking at the needs for our growth, both in new areas and some of the investments that will require for us to get preferential access to technology. Those activities are going on, and that capital has been earmarked for those purposes.
Thank you, Vinod.
Thank you, sir. Participants are requested to restrict to 2 questions per person in the initial round and may join the queue back for follow-up questions. Thank you. Our next question from Mr. Rajkumar Ocha. He's an individual investor. Please go ahead, sir.
So my question is, what holds Subex for not launching ID Central in other countries? Please enlighten us the progress of blockchain with partner Tech Mahindra.
Okay, so with respect to the ID Central, I think for us to make a big inroad into the market, there is a lot of pre-integration that we will have to do in individual markets. So, for example, in the market of India, our ID Central is integrated with most of the databases, DigiLocker and things like that. And so we are enabling the customers for onboarding, eKYC and many of those things. So at this point in time, based on the kind of the product, the work we have done, we want to be very focused on a few markets, make an impact, make a sizable let's say, impact in those markets before branching into new areas. Otherwise, it will be very difficult because we have to, it's not the product, the core of the product can be used, but before we launch, we have to do a lot of study of the market and then pick the markets where there is a need and also have the required infra for us to make sense of this digital identity. If you go to a market and there are no databases, nothing, then this will not be very impactful. So that's the reason, but for sure we will start expanding as we go along. So that's point number one. With respect to the blockchain with Tech Mahindra, we have had some interactions with our customers, but I think we have not got any commercial success as yet, and that is also because of the fact that this blockchain in the telcos, it's going to a completely different change altogether, because this relationship was primarily for the telcos. Having said that, we have made significant progress in moving the blockchain, particularly for the partner settlement and such areas. We are also, as you have seen one of our announcements, that we are working very closely with Saudi Telecom, and in their innovation lab, we are co-innovating them. We are preparing a solution for them in the blockchain area. So that Tech Mahindra relationships, we are moving forward, but we have not had any success. But we have had engagements with several customer innovation teams, direct customer innovation labs, to look at solving many of their problems using blockchains.
Sir, how many Hypersense projects presently we are implementing, and how many projects we would implement in this quarter? This is my last question.
Sure. We are, as of now, we are implementing 4 projects of Hypersense. And this quarter, once we have the we are expecting the fraud management, the full version of the fraud management to be released by March timeframe. So we have started the preparation work, but as we end this quarter, we will have almost close to 8 projects that we will be doing on Hypersense.
Thank you, sir.
Thank you, sir. We have the next question from Mr. Amit Mishra. He's an individual investor. Please go ahead, sir.
Hello, am I audible?
Yes.
Yes.
Hi, good day, everyone. Welcome on board, Sumit, if you're around. So first question, Vinod, if you can just walk us through on this, the thing you announced in Q2, and recently we received the postal ballot for internal restructuring with you are buying a subsidiary, but it's already 99% wholly owned subsidiary. So, and you're supposed to, there was an amount mentioned there, 95 crore. So is it some internal rebalancing of, accounts, or you have to actually pay someone?
No. Yeah, sure. I'll clarify. So this was if you look at our standalone entity, Subex Limited, you will find that all the businesses are sitting in 2 LLPs, and if you look at the accounts of Subex Limited, it's not a true reflection of what we are doing. So therefore, it was felt that we will move all the assets from the Subex Assurance LLP onto Subex Limited. This was solving many issues for us. And so this is on account of that movement of the assets from Subex Assurance LLP to Subex Limited. There is no cash, technically there will be some cash through the system, within the system, but there is no payment to anybody outside the group company or anything like that. It's just moving of assets.
So cash won't be touched. So overall cash will remain the same, with the company.
That's correct. That is correct.
Okay. Just a second question on revenues. Basically, we touched upon through various attendants, but 3 quarters in a row now we had seen year-on-year degrowth. I understand the point that there is issue of conversion from license to subscription-based services, but what I don't understand that you have firm contracts in place, you're providing them services, and the services attracts your fees basically. So what is actually causing the revenue shortfall? Is it you're losing some clients, or is it some on-site presence issue? Can you just give some more details on why we continue to be in the cycle of degrowth? It's very disheartening.
Okay. Yeah. Look, I think if you look at our business, about 60 to 65% of the revenue comes from annuity and managed services, and that remains the same. Maybe there will be some movement here and there. By and large, that remains the same, and it does not have any impact. Now, the impact is more on the rest of that 35% that comes from new projects. And new projects are net new projects from new logos and upgrades and other work that we do for existing customers. Now, the upgrades is where I think that the whole, that 35% comes primarily from upgrades and securing new customers. And that is where we are in impact.
Sorry, Vinod. Yeah, I heard this before in previous question. But if they don't upgrade, they're still using our services for existing or the previous installation. They are still using our services.
Yeah. So there is
it's not happening.
No. There is no impact. So if the customer does not get upgrade, all they have to pay is annuity or managed services, because that's all. So the upgrade is when we get upgrade a new version, and there is additional revenue on top of managed services or AMC, and that is where getting it is elongated. So if you look at AMC and managed services, there is no contraction. It's just going on, and we are doing the service, and it's our interest for us to go and show new features, new capabilities, and upgrade the customer to a latest version, because there are some changes that happens in the customer environment also to facilitate such upgrades. So that is getting impacted.
So there is no client loss.
No, there is no client loss. They continue to use our existing product, the existing version. It's just that they want to get into a new HyperSense version, and that's a new model kind of.
And also, we are still okay for $15 to $20 million top line for new areas. You said like 2-3 years, in 2-3 years last year. So basically, that would be December 2023. So you're still going with that target, or is there any revision to that?
Look, I think I don't want to give any guidance, but I think as we start giving you the details, probably it will give you the sense of the growth that we are having on the new areas. But I think I'm quite encouraged with the progress that we have done last quarter with respect to the customer addition in the new areas around our new products, because it's very important for us to get the first customers and convert them. And these are large enterprise customers. They have competed and won.
Can you give a quick breakdown of new areas, basically H2 and H3, what they are contributing right now in this quarter?
So at this point in time, it is. If you look at our overall number on our overall revenue, it was contributing about last year it was about $1.5 million contribution, and this year we expect that to grow much higher than that. But again, I think let's wait for a quarter more when we provide the details so that you can clearly understand the metrics. Because some of the metrics are very different for the ID Central and all. It is the growth or quarter-on-quarter growth that will give you a trend of the future thing rather than the absolute EBITDA and things like that. So the metric is different. So that is why we are preparing. We just want to get the right time for you to provide that. We will provide you by the end of this quarter.
Thank you, sir. So we'll move with the next question. It comes from Mr. Abhishek Kale. He's an individual investor. Please go ahead, sir.
Hi, Vinod. Am I audible?
Yes.
Vinod, one question on a scale of 1 to 10. What's your level of confidence in delivering double-digit numbers starting Q4 and the quarters ahead? No further questions.
Look, I think that I don't want to give any guidance at this point in time. I just want to stick with that stand. However, as I told you, we will provide you the metrics that will give you the growth that we have on the new areas, because it's very, very important for us to understand that the growth of the company will depend on the growth of the new areas, and we will have to stabilize. And once we have the HyperSense coming on board, we will be able to also compete in that. But the incremental, the breakout growth for the company should happen from the new areas. So my request is that wait for the end of this quarter. We will provide you the stats on how both IoT, ID Central, and also in the HyperSense things are growing up, and that you should be able to get a view from that Okay.
Thank you, sir. So we have the next question from Mr. Mohammed Ashraf. He's an individual investor. Please go ahead, sir.
Hello. Hello.
Yes, please.
Hello. Mr. Vinod, just I wanted to know only one thing. From last 3 to 4 quarters, we are looking that your revenue is significantly going down and expenses is going up. And second question that how many quarters we have to expect that you will improve your revenue and profit margin?
Okay. Look, I think as I said that we will start providing you details of all these our new areas starting this quarter end. So that will give you will be able to size up yourself how we are growing and the quarter-on-quarter growth that we are having in the new areas, albeit from very small revenue number. But I think that two things that I want to say that our new areas we have started adding customers now. And we are sort of almost doubling the customers every quarter. And if we continue on that, and our intent is to focus on the specific market and ensure that that trend continues rather than spreading too thin into different markets. So that will help us to grow our revenues as we go along. But the specifics, again, as I said, I will provide you as we will provide you as we end this financial year.
Thank you, sir. Our next question from Mr. Asit Koti. He's an individual investor. Please go ahead, sir.
Yeah. Sir, what I would want to ask you, sir, is I have too many questions, but I'll limit only two. The first question is with regards to the business sales and support people being transferred to Subex. Over there in the comment, it is mentioned that only the people, the product are not being transferred. Can you throw a light on that, sir?
Hi, this is Himanshu. I hope you are referring. Are you referring to the results and the notes in the results we have given, wherein the support team has been transferred? So, answer this. This is an old event. We have done this last year, wherein a strategic move was done. All the support functions. When I say support functions, all the non-billable functions were transferred at a corporate level. Because they were not specific to a particular IP or a logo, so that's why earlier to that they were with respective LLPs. A strategic decision was taken that they should be catering to the corporate level, and that's why these people were transferred from the respective subsidiaries to the parent, to the listed entity, and that is the standard business practice all over. So we followed the same and we did that. That was a one-time exercise, and after that we are continuing with this.
No, but then what is the value of developed technologies in those subsidiaries currently?
Currently, it is
are they all? Sorry.
The developed technology intangible stands at around 80 crores in the respective LLP.
Value of the development technology is 80 crores.
Yes.
Okay. And sir, with regards to, what Vinodji had said earlier also, that even in last meeting, I had asked this questions and sir said that we would be getting back to you, but we never heard about it. With regards to segment-wise numbers.
Yeah, so I think I was very clear last time also. We will provide that details by the end of this quarter. It may not be sectoral numbers because some of these new areas will be, the metrics are very different. It may not be the revenue alone. It might be the API calls and different kinds of metrics are relevant for those business. So we will provide that details by the end of this quarter, and that's what we have told last time as well, and we will provide that by the end of this quarter. For ID Central and each of the new areas, we will the metrics internally that we are tracking, because it is getting to 1 or 3, 4 quarters we have started monitoring that, and we have seen the growth, and that's what we will provide you as we end this quarter. I mean, along with our
now to understand the new regime of subscription. If I am buying a license from you, sir, after 3 years that becomes perpetually mine. That's what I think I have understood during the discussion. So if I have bought a license worth 1 crore from you, after 3 years, I would be only paying maybe AMC or something, nothing more than that.
No, not even after 3 years. After year 1, I mean, immediately you buy the license and you only pay AMC for next year. There is no more license you need to pay because you own the license. Right?
Okay. So I would only pay the AMC kind of thing.
Correct.
For nothing.
Correct. AMC.
Right.
AMC
Now,
you have to pay.
Right. Now, when I am moving from the license to subscription, what impact I would have on my balance sheet as a customer?
No, look, I think that is where it is. You have the license, you have the perpetual license, but we are asking them to get onto a new contract for Hypersense, which is on a subscription-based model. So they will continue to own the license. Technically, they can continue to own the license, but they will not be using that license. In lieu of that, they will be moving into a subscription-based service, which provides the same capability of license and running it. So that's how it is. They will continue to own that license. They will not use it.
No, I got that, sir. But when I have paid 1 crore, so how would you make that deal whereby what kind of percentage of that 1 crore I would be paying year on year as a subscription?
Oh, all right, okay. So look, I think that's something which we have a price book. I mean, it is not, we have not exactly priced that way that you are paying 1 crore and the 1 crore will come over 3 years. That's not how it works. We are based on the many other dimensions, right? One dimension is what is R&D cost, what is the value that we deliver, what is the market, other competitors from being competitive. Based on that, we have come with a subscription price, which takes care of, if you dissect the subscription price, you will find that within that the technology element and support is included in that. Now, we are not going to split that and show to customer or anything like that, and that will get charged month after month as long as the customer uses that service. So you could, I mean, for kind of a rough estimate perspective, you could say that, I mean, if I look at any, it's similar to you buy an Amazon web services versus a server, you will find that, maybe about 1.5 to 2 or 2.5 years, you would, if you paid a monthly charges, you would pay up for the full cost. And thereafter, you are getting charged again and again. But there are advantages of this, right? You get all the new versions. You don't have to pay for any new versions. The upgrade is much more smoother. All the capabilities come to you. You don't have to wait for the capabilities. All the capabilities, it's like if any of the update happens in any of a Google Pay or anything, it automatically comes to you. So that's a new kind of thing. So it's a shift that they have to make. Obviously, it is progressive. It gives them more capability, but they will have to take that decision to move from a license to a subscription model.
So, sir, correct me if I'm wrong. My yearly revenue as a Subex, my yearly revenue from the license business would get divided into 2.5 to 3 years or maybe 4 years, proportionately in subscription model.
That's correct. That is correct. But the only point is that the same subscription the same license can be we will get the same thing again, whereas in the case of a perpetual license, we don't have that opportunity.
Fine. So basically, I would take a immediate hit on a bottom line and top line in terms of value. My client remains with me, but since I'm moving from a license to a subscription, 1/4 of my license revenue would come into my book for the current year.
Yeah, for a new customer, yes, that is correct.
No, I'm talking about the old customers.
No, in the old customer, that's not the case. Old customer, we have already got the license. There is no more license they have to pay. They are paying normally the annual maintenance. So in lieu of the annual maintenance, they will have to pay the annual maintenance plus a delta on top of it to move to hypersense.
Okay.
Do you get me? You get me? Because they don't have to pay, a existing customer does not have to pay me any more license. They are paying me the annual maintenance, which they will continue to pay. But for the moving to a hypersense, for the technology element, they will have to pay a delta on top of that.
And normally the AMC is 15% or 10% of the value of the license?
That's correct. About 15% is an average. Yeah.
So my AMC revenue is getting conked off, and which is getting replaced by subscription fees.
Correct. The AMC is getting replaced for an existing customer. My AMC revenue will get replaced with a subscription, and our expectation is that subscription will be more than the AMC revenue.
Fair enough, sir. I do have a number of questions, and possibly I'll mail it to the company. And if you feel that those are answerable, please let me know.
We'll surely do that. Thanks.
Thank you, sir. Ladies and gentlemen, that would be the last question for today. I would now like to hand over the floor to the management for closing comments.
We thank you all for taking time for attending this call and your continued interest in Subex. You can always reach out to us as investorrelations@subex.com if you need any further clarifications. Thank you. Stay safe and take care.
Thank you, sir. Ladies and gentlemen, with this, we conclude our conference call for today. Thank you for your participation and for using Doorsabha's conference call service. You may all disconnect your lines now. Thank you and have a good day, everyone.
Your conference is no longer being recorded.